Hey, what's up, YouTube? I'm very thankful for all the support and that I've been getting for this channel. It has grown very quickly in a very short span of time. I'm very encouraged to see that I'm bringing a lot of value to the community. Yes, my videos are rather long, but I think the reason why they are long is solely because it's an investing channel. If I could get the message out in 3 to 5 minutes without emphasizing the risk, without emphasizing the technicals and the fundamentals behind each coin, I think, of course, a lot of people will jump on board. But the reason why I don't do that is because, if I just say a level, okay, that means you're just interested in the good stuff. You don't want to know why, all right? And you bought into it, you opened the position, and you lost money. Then straight up, you'll be probably even with the disclaimers, guys. I always put in disclaimers like whatever investing decision is solely your own. You have to go and do your own due diligence before investing in a particular coin, right? So I noticed that a lot of people are especially in my Telegram channel, right? They are coming in asking, what do you think of this coin? What do you think of that coin? Then I'll just ask, what is the business model of this coin that you want me to look at? How's the marketing like? How's the development team like? How's the community like? I will always ask these questions because if you can't answer me and you expect me to give you a level, okay, and I don't know every single coin out there, just let you know, okay, there's 728 coins and more to come, and I won't be able to cover them all, guys, okay, just so you know, okay, but I look at things from a broader perspective. I have an ample time horizon. Okay, I have enough liquidity. I never trade on margin. So whenever there are any big swings in the market, I never get taken out because I know for a fact that okay, I'm not gonna have a forced liquidation or margin call on my hand, right? Because I just won't do it because I know that this market is already so volatile. It doesn't need to have margin. Okay, so that being said, I am gonna cover the top investing strategies that I use, or at least not just strategies, but also they are approaches, right, towards cryptocurrency investing. And I hope that everyone watches this video in its entirety and not just skip. So for those who are waiting for cryptocurrency levels today, it will not be in this video. So if you are someone who is new and you're a beginner, I strongly recommend that you watch this video and understand and try to follow these tips so that you don't lose as much money as if you were to not watch this video. And also, if you stick to these strategies, you will be very profitable in the long run. Okay, so let's get to it. Okay, so now, let me just give you a little bit about how I came into cryptocurrency investing first, right? So I was an internet marketer for the past 2 years. Before that, I was a banker. And during my banking days, I made a lot of mistakes when I was doing my trading and my investing. I lost 6 figures. Okay, I lost 6 figures in the stock market because I didn't follow any of these fundamentals. I just wanted to get in. Right? And I can clearly see that people just want to put their money in because they're hearing about Ripple, they're hearing about Bitcoin, they're hearing about Ethereum going up like 20, 30, 100%, 200% in a day, and it gets people excited. People are interested in the return. But they fail to see the overall strategy of the play here. They just want to get the money in. So now, when I lost those 6 figures, basically I see the exact same trend on how some of you are approaching the market. Now, you will make money with your small bets, but I promise you, if you keep it up, you're gonna lose big when you start putting in money bigger with the wrong strategies or the wrong approach. I guarantee you, you will lose money. Okay, I don't even have to I don't even have to even know you. I just know you will lose money. So what I'm gonna do is just help you quickly cover these 6 points that I've written. I'm sure there are more, okay, but these are the 6 points that I follow very religiously when it comes to investing in crypto. So that being said, I basically recovered everything during my internet banking days, my 6-figure debt that I lost, it's not a debt. I would say I just lost it, but I recovered all of that back. But it took me 6 months to lose that money. Okay, six figures. Okay, and after that, it took me 3 to 4 years to recover everything back, guys. So I'm not sure how many people can do that, and I don't want you to be in that situation. So I'm doing this for you guys. Okay. So firstly, very important, when you do select a coin, a token, a platform, always have knowledge about it. When I say knowledge, I mean really read the white paper, read the yellow paper, understand the fund, understand the business model. What sector or what category of a business is it doing? You know, is it a smart contract platform into securities, into payment, into gaming? What is it? What is it that is the unique selling point? It cannot just be about blockchain and decentralization and privacy. Yes, it is important. That's how the cryptocurrency community is being built, because of the decentralized nature of it. But eventually, it has to have some appeal. So understand those things, right? Then from a technical perspective, okay, you start looking at the charts. Okay, you start looking at the charts, you see what could affect it. Is it the US dollars? Is it the euros? Is it key political announcements? Who makes those announcements? Maybe, for example, SEC wanting to clamp down on the overall cryptocurrency markets. Maybe a regulatory body wants to start auditing the exchanges. Okay, so exchanges are being affected. You need to understand all these things that cause the crypto sphere to be affected. Okay, now that is on a very broad-based perspective. All right, so that is should be a lesson on its own. But you know that I can't really cover all that. Or is this going to be 1 hour long? Okay, next, understanding your risk profile. Now, people are categorized into 3 risk categories. Okay, of course there are subcategories, but let's just say 3: low, medium, and high. Right? So when you are low risk, when you're a low risk taker, you should only be sticking to the top 3 to 5. Okay, top 3 to 5 cryptocurrencies, because the volatility of the top 3 to 5 cryptocurrencies are going down, in a sense that they're not going to have very big price swings unless something really bad happens into the market, just like what happened on Saturday, right? So if you're medium risk, you can start allocating a portion of your investable capital, okay, into say a 50-50. So maybe 50% in the top 3 and 50% into the top between the 3, let's say rankings 4 to 10. And of course, if you're very high risk, then of course that's like what everyone is doing right now, right? Just wanting to put all the money into SC coin, into BCN, into whatever, man. Look, guys, I understand how it feels like to make that very quick, fast money. I understand it. Okay, it's a very good feeling. But trust me, if you continue to have this approach without understanding your risk profile, I tell you, you're going to come back and watch this video and you'll be like, I wish I watched this video earlier and I wish I followed these steps. Okay? So some who have lost money already, it's okay. I hope that you recovered from it. I hope that you still have an income, and just, you know, stick to these points. All right? So once you understand your risk profile, you get what I mean. Huh? You can allocate your funds a little bit better. Now, you'll be asking, okay, well, how much to allocate then? You can have a 60-40 approach. 60%, if you're low risk, 60 to 70% should be in the top 3. Okay, this is just an example. It doesn't have to be, but just an example. 60 to 70, 60 to even 70 to 80% if you're very conservative, right? Then, when you're moderate, of course, it's anywhere from 60-40. That means 40% in the top 1 to 3. That means Bitcoin, Ethereum, you know, Ripple is subjective because it's so speculative. I wouldn't say putting money into Ripple at this point. But Bitcoin, Ethereum, Litecoin. Okay, these 3 are the coins that, if you notice, are a little bit more well received. So you can have them as a store of value. Now, for smart contract Ethereum, however, I wouldn't say it's a store of value. It's more on a broad-based platform, right? So it seems to be a little, I wouldn't say it's very, very stable because it moves up and it moves down very quickly. But Bitcoin and Litecoin, I would say that they're starting to have a little bit more resistance. Of course, naturally, Bitcoin recently went up from all the way to 2007 all the way down to 2006. Okay, that doesn't show much stability in a sense, because you can't have such a high price volatility when it comes to a currency when you want it to be stable. But as the years go by, as the network strengthens, it becomes better. So why am I on point number 2 for so long? Because I think risk profile, identification of risk profile is very, very challenging, and I'm sure I'm going to get a lot of comments about this, a lot of PMs, a lot of emails on this. But that being said, it's just try to understand your risk profile, okay? Now, investable income. This is pretty straightforward. Money that you are willing to put in the market, and honestly speaking, you're willing to lose all of it. I repeat, all of it, okay? Cryptocurrency, unfortunately, is still the most speculative market out there. It doesn't even have to be on leverage, and cryptocurrencies can just go from, say for example, you were in the money, you can lose 50% of your portfolio in a day. It can go back 20% up, and then you lose another like 50 to 60% from there. And then at that point, you have lost 90%, and you'll be asking yourself, why did I put my money into this particular crypto? Then what happens is that after the bear market of that particular cryptocurrency, it might recover back up to the highs. And that's when you realize you lost money, you had a bad experience, you'll never touch this scene again. And that is a huge mistake, because in crypto, okay, it is the next leg. It's the next 10 years, guys. Will there be a bubble? Yes. Will there be several bubbles? Yes. Okay, so just bear in mind, have investable capital. May it be monthly income from your salary, may it be savings that you've had, retirement or whatever, but always put in a portion of that retirement, not the whole lump chunk, man. If you're telling me that it's retirement money, that means you still need money to eat, pay the bills, so on and so forth, whatever ongoing monthly expenses, you never touch money for that. And never put it onto cryptocurrency. Never. Not any asset, not even the stock market should you ever do that. Because cryptocurrency doesn't pay you any dividends. Okay? So you have to be very, very watchful. It's active income. It's very hard to create passive income from cryptocurrencies. Okay? Now, time horizon. Okay, just to correct myself, of course, if you are like a node, a master node owner, like how Dash has created, but that's like a what? $100,000 master node? Like how many people have $100,000 to secure a master node? Right? It's very unfair. So I don't think that this model is like fantastic. Of course, if you were an early adopter of Dash, and then now it's like 100,000. Is it 10,000? No, it's 10,000 Dash to secure a master node. Sorry, but it's 100,000 in terms of value, right? Because it's $100 for a particular Dash token at the moment. So it doesn't kind of make sense to because you can earn dividends, I think weekly or something like that, and that's like the so-called the dividend, right? But it's $100,000, guys. I have that, but I wouldn't do it. It's not like crazy value for me. I would do it with maybe $10,000, but not $100,000. I mean, I don't even know like how long Dash will last, right? It's just all marketing at this point of time. Okay, so I'm just saying, just giving you a little bit of a rambling a little bit off, but I'm just giving you an example. So investable income is very important. Once you have determined how much you want to set aside for trading, investing, stick with it and grow it from there. Okay, now time horizon. This is very subjective to each individual, right? You may have a 6 months time frame, 12 months, 1 year, 2 years. I'm very long term. When I say very long term, I'm looking at 5 years, 10 years. Where the cryptocurrency scene is going to be. Will I make mistakes along the way? Of course. I'm a human being. At the end of the day, I have chores to do. I have, my kid to attend to, my wife to attend to. I can make mistakes. I can even read something wrongly, or maybe the information was so well drafted that I couldn't even tell it was shit, right? So it takes a lot, and you want to have that ample time horizon to make mistakes. You also want to have that time horizon in your portfolio so that if there's an opportunity for that crypto that is down to recover, it can, right? I see people very short term, guys. I see you all looking at like very short 5 to 10, 15 minute candles. But if you notice in my videos, my candles are 1 day, 1 month, very long term, right? I take a very long term approach about things. So that's my time horizon. So the people who follow me are usually not traders or day traders as per se, but they are probably long term investors. And that's just my approach. Okay, so just understand your own time horizon. You decide for yourself. I'm just giving you an example, what kind of perimeters you should look out for. Now, take profit and cut loss. Taking profit and cut loss is essential. Taking profit, especially in a winning position, helps you to do risk mitigation. That means you're taking money from this particular position and, of course, keeping it in fiat or keeping it into a solid store of a crypto that has a kind of a flattish. But at the moment, there's no crypto that really does that, because every crypto is now having a lot of infusion of fiat money. Whether it be LTC, whether it be Ripple, whether it be Bitcoin, or, you know, all these currencies are actually moving up in value because US dollars is being pumped into it, euros is being pumped into it, Japanese yen, Korean won, Sing dollars, it's all being pumped up, guys. So if you notice, your positions are actually earning you less Bitcoin despite the fact that the dollar value is going up. You see where I'm coming from? So if you made a call wrong, if you made a wrong call, for example, so that's talking about cut loss, you need to say, okay, I'm only willing to lose 10 to 20% of this amount. You have to be disciplined about it. And if it swings back up, you have to just suck it up, you know, and then after that, just reassess the trade again, or that particular coin again. Was there something, you know, fundamentally that you missed? Was there some news or reaction about it that you missed? You see? So this is what I'm talking about. And also, when you talk about take profit and cut loss, you try not to be, as much as I say this, try not to be emotional about it. When you're emotional about the way you trade, you will always lose money. Okay? You will not even think logically. You'll be either too greedy because you don't want to take profit, or you don't want to cut loss when the loss is too great. Right? Only when the loss passes a certain threshold. Say, for example, if my threshold is 50%, I'll feel very uncomfortable after 50%, to be honest with you. But if I had done my fundamental and technical analysis, I've understood my own risk profile, and I have enough investable income and time horizon, I will be able to convince myself that I will allow it to drop below my 50% threshold. Let's say it drops to 70%. I will be willing to at least let it ride out, because I have the time horizon to allow it to appreciate again. You see where I'm coming from? And this time horizon, you say, when? People always ask when. I don't know, right? It can be 6 months, it can be a year before movement starts, right? So do you have that time horizon? If yes, then you know what I mean. Now, never trade on margin. Okay, never trading on margin is just very straightforward. If you're a beginner, please, for the love of God, don't touch margin, because you're going to lose money and the exchanges can manipulate it, okay? They can cause a swing up and down for people who are opening long positions, short positions, and you're going to get taken out. Simple as that. You may say, Ryan, it's just $100. So, what if that $100 was in a good investment and it made $1,000 in 3 months, rather than you losing $100 today? Have you thought about that? So that's what I mean. Now, if you are already kind of seasoned in margin trading, you would know that you will want to have enough liquidity. So meaning that your margin account, okay, is strong enough, is ample enough or big enough that you can open a position, and each position, right, will never be eating too much into your main liquidity, your main bank account. What's that called? The margin account, right? Okay, so 10 to 20%, 10 to 20 times is what I would recommend. Meaning that you're using only 10% to 20% maximum, okay, on a position, but you have like 100 to 200 times behind. So that if you get a swing, you're not going to get margin called. You see where I'm coming from? If you believe that this position is going to go up, okay? But it's just that for the short-term volatility, when it happens, it's going to pull back. You're not going to be affected. You're not going to get your position liquidated, force liquidated. Okay, so that's what I'm trying to say. So maybe I would just say in a little bit of layman terms. Let's say Texas Hold'em. Okay, if you talk about Texas Hold'em, you know, poker is very popular in a lot of countries, especially in America with the World Series of Poker. Now, if I am a poker player and I'm going for a $500 buy-in game, okay, $500 buy-in game, that's usually a 1-2 or 2-4 game, okay, small blind, big blind. Now, I would want to have in my bank account at least 5,000 to 10,000. You see where I'm coming from? To play a $500 buy-in game, I cannot go and play a $500 buy-in game with only $1,000 or less in the bank account. You see where I'm getting? So the same thing applies for the margin account. So I hope that these tips, I'm sure there are more, feel free to comment, feel free to put in certain suggestions that if I've left out in the comments below. Also, have a look at my list of cryptocurrency wealth generation programs, right? If you're someone who just wants to build on mining and passive ways, that means you don't want to touch cryptocurrency active investments, okay? You can do it passively through those programs, okay? Just have a look at my list and adopt it to your accumulation strategy. Bring it together. If you watch my previous videos, you'll know what I mean. Have a look at the list in the description below. Okay, so guys, thanks so much for watching. Love the support that I've been getting. Don't forget to like, dislike, and last but not least, continue to subscribe. And I actually also created a Telegram chat for anyone who is interested in talking about cryptocurrencies. Please feel free to join me in that Telegram chat. It's called Crypto Grinders. All right, so with that being said, thank you. God bless.